Hello everybody. Welcome to Vicarious Ventures. My name is David Adams. I really hope everything is working here correctly. Today I'm going to be talking about 3 airline companies I've been considering, and by the end of this video hopefully we'll have made a decision on which of these is the best one to actually put as part of the portfolio. So let's just jump right into it and talk about the companies that I'm considering. Delta, Alaska Air Group, Southwest Airlines. DAL, ALK, LUV are those tickers respectively. All of these, from a value perspective, are a great deal right now. All of these are far away from their 52-week highs currently, and all have pretty good future forecasts. So let's jump into some ratios and get a feel for how we can actually find the best of what appears to be a couple good options here. So first, let's look at the PE ratio. 9.39 for Delta is going to come in first place here. Alaska Air Group 12.7, still a great PE there, and Southwest a little bit closer to the industrial average, 16.26. When we look at forward PE, we see Delta coming in at an 8.79, still leading the pack there. Alaska Air Group, however, an impressive 10.11, coming down from that 12.7, showing real future value there. And Southwest, same argument to be had with a 13.9. Looking at PEG ratio, the Alaska Air Group, 0.4. Mind you, we're looking for a company that comes in at less than 1 here. So all of these are a great call from a future earnings perspective, but Alaska Air Group slightly leading the pack here. When we talk about price to book ratio, ultimately we're just talking about what's the share value versus what is the company's tangible brick and mortar assets, right? So with that said, Delta here, 2.6, excellent price to book. Alaska Air Group, Southwest. When looking at these against each other, Delta comes in 43% lower than Southwest there, that 2.6 versus 3.7 respectively. So to me, that's just giving me a feel for how close am I to the basement and how much downside is there really left to be had. So, well, one last thing we need to talk about actually is the dividends. I'm going to be talking about these from an annual perspective, and remember, a dividend is just the money you're paid out for holding that share. And so Delta coming in 2.22%, excellent dividend there. Alaska Air Group 1.44%, and Southwest at a 0.92%. But sometimes we can throw a wrench into these dividends by looking at the payout ratio. And when we look at the payout ratio, what we're looking at is what percentage of the earnings are going to dividends, and what percentage stays with the company to allow for growth and future proofing, etc. So when we look at a payout ratio, Alaska Air Group 19%, Delta 16%, Southwest 13%. But remember perspective there, that 13% is on a dividend that's not even half of what Delta's, right? So really, if we were to look at who's winning this race, I think from a dividend perspective at least, it's Delta. Having 2.2% dividend, absolutely comfortable with that, and then a 16% payout ratio allows the company plenty of wiggle room in the future if, you know, whatever may happen. They're allowing themselves to put a lot of money in the bank or to grow their company respectively. So who would you choose looking at these 3 companies? Drum roll please. I ended up going with Delta, ticker DAL. Recap, Delta had the best PE ratio, not just now, but in the future as well, looking at that forward PE. And then when we looked at the price to book, it was 2.6 times the actual brick and mortar value. And that was 43% lower than Southwest, which made me feel a little bit more comfortable about where the basement was and how close am I to the bottom point of this down stretch right now. One thing we didn't talk about, extremely important to call out though, is the operating margin that Delta brings to the table. 15.7% operating margin, which is top 13% in the airline industry respectively. Profitability like this is absolutely huge for several reasons, but one reason, again, when we talk about mitigating risk, if we hit a recession or a downswing or whatever may happen, at least I know that we're squeezing out more money from every dollar bill than most other companies in the business, which is great. Another thing that compounds on that is the fact that the market cap for Delta is the largest of the three that we looked at a $34 billion market cap. Southwest came in second with a $31 billion market cap. That's 10% smaller respectively. So again, just more wiggle room, more ability to take a punch in the future. And then icing on the cake, what really pushed it over the top was not just the 2.2% dividend, but the fact that the dividend payout ratio was just very, very comfortable. So with all that said, thank you so much for your time. My next video is going to focus on technologies and futures. We're going to compare several stocks across that industry, and we're just going to talk about a lot of the same ratios, a lot about the future of these companies, and hopefully make a purchase or two as well as we fill out the portfolio. Thank you so much for your time.